you're someone who's seen the previous mega bull run that we had, right? And I'm talking about the 2004 onwards all the way up to global financial crisis, 2008 bull run. And I think that is the first time this market got real brush with big, foreign money, the starting of domestic retail participation. I know a lot of us, like I opened my first mutual funds back then as well. So what are the parallels? You're the best person to ask this between that bull cycle and this bull cycle. And what are the differences, if any?
So, yeah, there are a lot of differences, I would say. So, as I say, first, at that point of time, there was no visible political stability. And there is no physical policy stability, right?
Okay.
So that is one of the fundamental difference.
Okay.
Second, I would say our corporates today are in a far better situation than they have ever been, in my opinion. Most corporate balance sheets are fully
deleveraged, they're clean, healthier now.
Banks are completely clean and are willing, are and ready to support an accelerated growth going forward. Third point is that competition actually has receded big time. So if you look at in any sector, like in telecom, we had 15 people 15 years back, and we are down to maybe 2.5, 3. So I'm just saying. Similarly, if you look at even any sector, like there's one sector which I follow very closely, which is this infrastructure companies, which are building the country. If you look at how many players were there in the last bull run versus how many players are there today. So I think competition has receded and the business has gone into hands of more organized players. So that is again a clear difference. Third thing, Surabhi, which is very different for this market is the India's position in the world map. So geopolitically, actually we are in a very, very sweet spot post-COVID. So pre-COVID it was all manufacturing, everything was China, right? But the way geopolitically the world in a way has got divided and India is in a neutral, in a sweet position. So things economically, given the world order, is also working for it.
It's favorable for India.
Exactly.
How does one start deploying more capital in the market? Now, I want to start with the concept of valuation, right? Do we keep following the old set ranges? Should we be ready to break out of the ranges? How should an investor
We are already
understand?
breaking out, but if we just live, as I said, sometimes experience can be very expensive, right? I'm saying we are already breaking out. But the way to look at it, Surabhi, that it is the market which is giving you a chance. So if you are able to identify things, so let us say financial stocks by and large have not done well.
Absolutely.
But within that, PSU basket has done
very
exceedingly well. If you look at last 3 years, so even though many of the large private banks have not done so well, but there has been opportunity to make money maybe in select NBFC space and maybe in select PSU. So if you look at the markets are actually running in rotation, so there is no real dearth of opportunity even in this markets.
Thank you for watching CNBC TV 18 and do follow us on all our social media platforms for news, updates and more.